Do y'all know what I mean by round trip? Last Friday's close, S&P 61.33 and a quarter. Monday's Globex low, 59.48. And where are we now? 61 and a quarter. Can we get back up there, or is the PCE going to derail the rally tonight? We'll find that out at 8:30, 8:35. Craig Johnson joins us to give us his perspective on the markets. Apple, green apple, apple of my eye. Let's use all the puns for Apple. Intel, well, sell the rip in that one. Deckers, do you buy the dip? We got a lot to cover on this Friday. It's pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning again, traders and investors. We're in the green thanks to Apple. We're up 26.5 handles, 61.25.5, just near that close for Friday. The buck trying to clear 108, up 46 cents, 108.09. TLT down 17 cents, kind of consolidating here, or up 2 cents at 88.36, ahead of the PCE number. USO flat, 77.78. Gold. GLD, new all-time high, up 84 cents, 258.89. Silver, well, it's back over 28. It's trying to get to 29. SLV up 12 cents, 28.84. Bitcoin, it's down a mere $300 at 105,400. Let me stop the screen share. Dennis is going to come on to the stage. Christian's going to come on to the stage. Gentlemen, nothing happened this week. Absolutely nothing happened.
Is it a full round trip? The S&Ps are back to where they started? Is that what you're telling me?
Yeah, that's exactly what I'm telling you. Not exactly. Not exactly here. Let me show you the old trusty data window. I wish I could figure a way to keep this up all the time. But let's go right here. The close from last Friday, right, was, I was wrong, 61.33 and a quarter. Right there, right where my cursor is. This is where we're trading now. This was Monday's low at 59.48.
Unbelievable. Nothing happened this week, right?
No,
Quiet.
no deep seek, no dive for the market. It's all gone here. It's all, back. Blindly buying the dip wins again. Just close your eyes, hold your breath, blindly buy the dip, and you win money. It's just what this market's all about. It's the fade trade. There's two core strategies in the fade trade. Buy the dip and sell the rip. So sell the rips worked pretty well. Buy the dip has worked even better here, at least this week. So many stocks, same story. Meta dipped on the initial report, rips higher. Tesla dips on the initial report, rips higher. Microsoft did dip on the report and rip higher, but then it dipped again and hasn't bounced back. So I guess that's the exception to the rule so far. But you wonder how long that lasts. Christian, you were bringing up the energy names. We're going to get to Apple here in a second. But you were bringing up those energy names. Vistra, VST, CEG, TLN's another one. Oklo is another one. I mean, all these stocks absolutely hammered on the DeepSeek thing Monday morning. And Oklo is making new highs. So it's just like it didn't happen. They buy them right back. Close your eyes, blindly buy the dip, and you win money. Unbelievable.
Happy Friday, guys. Yeah, I mean, and we had a great guest yesterday. Mark Chaikin was like, hey, some of these names, it's a gift. And yeah, you mentioned a couple that haven't come back. One name that hasn't come back, which is kind of interesting because some of these AI names, like even like TEM2 is another, that's a big AI name.
Yeah.
Outside of the energy. I mean, that name's come all the way back too. But one name that hasn't is NVIDIA. That's just kind of sitting down there at the lows, and it hasn't had that. I think there's the buy the dip mentality that's going on with retail, but there's been so many other plays that have come up, and it was to my point earlier in the week talking about, that name is in the eye of the storm, and sometimes those are the last ones where there's the big story, but the sympathy plays are the ones that got bought, and that's basically what's happened this week.
Well, they've tried to buy the NVIDIA back a couple of times. Obviously, off the bat, the 116 up to the 129, back down to the 116, back up to the 127. Then they did after hours for fun, 127, 120, 127, 120. So they keep trying to buy the dip, but the sell the rip is just a little bit stronger, so it keeps pushing it back down. Remember the inverse correlation that we've been talking about, though, with Apple and NVIDIA. So I don't think it's surprising that NVIDIA is showing some weakness here today, because Apple's showing a lot of strength. And maybe that brings us into Apple here, Christian. I mean, buy the dip works on this one too. It wasn't a very big dip last night. It was just dipping a little bit on the earnings. Joel, you got that earnings report? You can give us the numbers.
Yeah, I do. I just wanted to make one general comment here in the fade trade. As far as individual stocks. I mean, you're going to have that all the time, right? Rips and dips. But I mean, this market, I'm just looking at the S&Ps yesterday. We were talking about this yesterday afternoon. I mean, it was just trying to get through resistance. It was trying to get through last week's lows. I mean, we are getting back up to like a breakout area. Next couple days are going to be Friday, Monday, or whatever are going to be important. You do have PCE at 835 that can knock us off the kisser.
For sure.
But if the fade of the overall market, if that is going to hold true, then the S&Ps better find some resistance here soon. And I don't think they're going to have the same kind of catalyst that they had on Monday to take us back down. I'm going to give you the Apple numbers. And Dennis, I'm going to give you one note on the price action. And then I'll see if you notice the same thing. 240 versus 236 on the EPS. Slight, I'd say pretty much in line on the revenues. Man, they make a lot of money. They broke out of those sales numbers. Some were better, some were worse. Guidance was okay. But the two kind of off here, let me get the 24-hour chart up here. I thought it was extremely muted after the actual number. I mean, it finally had some moves and settled down here, but it seemed very orderly. Was it like that, or am I imagining things?
No, it was kind of quiet, really, off the number. They sold it off a bit, then they bought it. It was moving around a 5 or 6 point range on the initial print, and then they kind of settled in to be down a couple of bucks, and they were waiting for the call. And then obviously the call happens, and that's when the stock rips higher. So it was quiet, and I don't know what the expected move. Christian, do you know what the expected move was on Apple? I never did look at it.
Oh, I could get it.
Yeah, maybe the chat knows too. I was sitting with bids loaded up at 220 into the print, like gutsy as hell. Like if it would have like disappointed, I was buying that 220 level. I already had it in my mind. That 220 level was huge. Probably should have wrote puts at the 220. I didn't really think about it, but probably should have just wrote the 220 puts because that level is just so big. I don't know what they were giving you for it, but you probably would have got a little bit of money for those 220 puts.
That was about 4% move is what they were implying.
4% move. So, and obviously we're even inside that. Well, we're right up against it 4%. So it's always funny how these moves kind of get capped out, at the expected move here. So it's not surprising it starts to find sellers here right at the expected move. But this stock here, it's Apple. I mean, it's loved by the markets. Right now, they're finding the stocks that are loved, and they get a little bit of a dip. They got to buy them. They just can't help themselves.
Would you throw this in the loved retail?
Yeah,
basket?
I mean, it's underperformed. One thing to consider, long-term Apple is loved, but it's underperformed here in 2025. It's sold off significantly at the beginning of December. The inverse correlation within an NVIDIA still exists. I mean, you can clearly see NVIDIA's been showing relative weakness. Apple's been showing a lot of relative strength the last few days. That has not gone away. That is in play here today. NVIDIA is down here again. Market's up, lots of stocks down. NVIDIA's or lots of stocks up. NVIDIA is trading down. So inverse correlation is still alive and well. So as a trader, I keep that in mind when I'm trading NVIDIA and Apple. See Apple ripping, I'm usually more bearish on NVIDIA. NVIDIA dipping or NVIDIA ripping, the opposite for Apple. So, I mean, after the open, anything can happen. But right now, so far, so good for Apple longs.
And I think in terms of like new products and new features. I think they're going to move the power jack from one side of the phone to. I'm just kidding.
This is what they do. This stock, we've talked about Apple. It has been the buyback story. This has been the driver of price. It hasn't been top line growth. It hasn't been innovation, folks, because you're right. That's the biggest innovations they get. I've argued that they haven't, and I even saw that in the media afterwards, but I've argued that they haven't had any real huge innovative products since Steve Jobs. They've just been milking the cash phone, the iPhone cash cow. And there's an argument to be made there. And it's been a buyback story. I mean, this has been driven by buybacks and just the cash flow that iPhone and the powerhouse that it is. I don't know if that matters at this point in time. It's trading like 32. Multiple expansion has happened here too. I've argued that I don't own Apple now because the growth doesn't seem to be there. And the stock is trading 32 times earnings, where when I owned it at first, it was trading 12 times earnings. So I just don't think there's a lot of long-term potential here until they start innovating, which they might. But what are you going to say, Christian?
I was going to say you're right about the buybacks. I saw this on the Twitter sphere yesterday about like how the shares outstanding have been decreasing over the year. But I didn't see them announce anything. I don't know if they normally do that on earnings. I don't follow the Apple earnings call that closely. But did they announce a buyback program or new buyback?
I don't think so.
I don't think
I
so
actually
either.
don't think so.
There's no shares left to buy back. They bought them.
They'll buy back forever. Maybe they did. I don't know. Did Apple announce a buyback?
I'll rely on the chat for that because I didn't see it.
I never saw one go buy the ticker. Let's go look.
Not yet.
While you guys are doing the digging on that, I'm just going to throw out one technical level because Triple D likes only one level. I'm going to call this 250. That's a big number. I mean, look at all the people that got their money back in this area. It's slightly above the pre-market high. Also, it is, near the expected move, a little bit over the expected move. The pre-market high is in that area. It's just a nice round number. I mean, if you were choking on this thing at 220, just 8 sessions ago, and now it's at 250, that was your target, or you got some of the cheap options or something. Maybe they're in the money, and we'll look at this 250. After 250, things open up to above that as well. Let's go to a dog here, Intel. That did get faded. They beat by a penny, 13 versus 12. Beat on sales, 14.3 versus 13.81. The revenue guide wasn't so good. It's Intel. What else do I have to say?
Okay, it's the opposite story for Intel to Apple. Stock absolutely hated. If it pops, it's almost always a sell the rip opportunity here. It's exactly what has happened again overnight. It ripped up to almost $21. The sellers emerge. They hate the stock. I have that small position in the long-term portfolio along with Joel. You still have your little small position?
I am about this close from cutting it.
I know. As soon as me and Joel sell this, it's going to rally like 50% the next day. That's what's going to happen here. It just goes to show you, don't buy the laggards, don't buy the dogs, don't buy the crap. Me and Joel thought we'd be heroes, the turnaround story of Intel. There's no turnaround story. It doesn't appear to be had. Maybe eventually, but I think you're going to be waiting a long time, and I may not even be alive to see it. So here we are. It's up 30 cents. Already leaked back 2/3 of the gains. This stock is just hated.
Sell the rip.
Christian doesn't even no. Intel's not my stock, Christian says. Follow Christian Fromhertz on your investments. Don't follow me and Joel on this Intel crap, because this stock has been the dog of all dogs.
Christian, I thought I was going to get a pass out of you on this one. Just pass.
Sure, we could do a pass, but I was just going to mention, because it's a great point. There's buy the dip stocks and there's sell the dip and there's sell the rip stocks. Intel's a sell the rip stock.
It is.
That's all I got.
Forever. Eternal sell the rip stock.
Okay,
so that's important. The fade trade applies differently to different stocks. Yeah. 2 portions of the fade trade: buy the dip, sell the rip. Some stocks are better to buy the dip on. Did you buy the dip on ServiceNow?
No, I
haven't yet either.
I liked. I asked Mr. Mark Chaikin that yesterday. I said, "What do you think?" And he says, "I think it's going to be okay, but there's no rush." And I agree with that. And I do like to wait. Again, this is like forever times if I say this now, but I do like to wait the 3 days. Like if there's a bad earnings report, I generally like to wait 3 days because everybody gets all excited about it and then they forget about it 3 days later and then they start to buy it back. So that's what I'm looking at in ServiceNow because I do think it gets bought back.
I do
Yes.
too. It's
Yeah.
already bounced a bit from the lows. Joel, bring up the chart on ServiceNow. I talked about the 1,000 support. It took that out. They like to take out the big number to shake out whoever's leaning on it. But that 990 isn't too far from November low 993. So I think maybe you're leaning on that. If you get a little back in the fill-in, maybe you get some chop action. Maybe PC knocks us down. Maybe it might knock us up too. But for whatever reason, it comes back near 1,000. I think there's buyers around this near 1,000. This company is just loved.
Gap into a gap area. So 50 days up at 1080. Tough technicals on that one. We had Moshe Katri talking about the credit cards and Visa. Visa, everyone's using their Visa. 275 versus 266. Nice beat on sales. Payment volume up. Cross-border volume total up 16%. Visa firing on all cylinders, but off the pre-market high at 352.71.
These are just eternal holds, these stocks. And again, I'm kind of ticked off that I sold my MasterCard. Sold it back during the COVID crisis, I think it was 2020. I had it in my portfolio for 12 years. It was just an awesome stock forever. Should have never sold it. Stock's $566 now, continues to go up. Visa's the same story. These stocks just print money. I mean, they're printing presses, right? They don't even take risks. They get that out of there. So they literally are just taking 1.2% or 1.5% of every transaction, whatever the hell the fees are. I mean, just companies that have just been awesome since the beginning that these things have IPO'd. These stocks have just been straight up.
They have been too, and I didn't like playing these names because they ran into the report so much, and MasterCard just continues to kind of grind higher too. So it's tough because I know we're going to get to I guess you could call it the disaster of the pre-market, which is Deckers, which was also a stock that was up a lot. So it's tough because you do look at the risk to reward and some of these things going into earnings, and yeah, I mean the MasterCard and the Visa. Just kind of shaking my head that the names are up so much and they don't even get a dip at all. But Deckers is another story. And that also, I think, going into the report, I don't know how much is Deckers up this year. It's up a lot this year. And I think
what don't they like about this report? $3 versus 255, 183. That's the guidance. No, it's $3 versus 255. Beat on sales, revenue growth. What did they say? Did they say that people don't want to wear
Here,
winter
so
shoes?
Here, Joel, it's about doing the math here on it. So they're looking 575 to 580 versus a 554 estimates for the full year. That looks like a guidance raise, but they just beat. So if you're just looking here, 2025, they just actually beat by 45 cents. So when you do the math and add it all up, it means that they could be light on the next quarter. So, I mean, that's what they're doing. They're doing the funny math to try to figure that all out and say, hey, if you're going to beat by 45 cents, but you only got raising the guidance a little bit here, maybe that's what I think they're looking at here. They're really reaching to find bad news. This was more of a case where the bar was simply too high. The stock has been running and running and running. It was $50 2 years ago. It's 223. I closed that. It's sells stuff. This isn't an AI story. It sells outdoor stuff. It's got huge stores that they sell stuff at. This has been an incredible move, an absolutely incredible move, and it's simply a case where the quarter was fine, but the bar was simply too high. I do think this kind of stock they buy the dip on because they just love it. They love it. I've actually took a small day trade flyer I was picking up. I picked up some at 187. I'm going to flip out of that just after the open probably, but hoping for a little bit of a bounce here. It's bounced a bit. I should have sold it about an hour ago because it was doing a lot better at 193, 194. Still in it here, but Christian, you get down during this one too?
I did. I bought some too, but a little bit early, so I might buy a little bit more here this morning. But
never frown. Average down.
The stock is up 77% over the last year, so that's part of it. I see Mr. Spinner mentioning too that a couple of their divisions were a little bit slow. I think that the Teva was a little bit weak, but I think people are really looking at their other growth drivers is like the Hoka, which did very well. So I agree. I think it's the fact that they're being a little bit nitpicky in a stock that's up huge over the last year.
All about the
Dennis,
bar.
did you say stores? Big stores?
Deckers don't have big stores. They're pretty big
I
stores,
don't.
don't they? I've
I
been in
don't.
those Deckers.
Really?
Are they
I've
small? Pretty big stores.
I've never seen one.
You never seen a Deckers? They're around. They're huge stores. Where are they?
Really?
Where are they predominantly located? Let's look. Deckers brands. There are no stores? Benner says there's no stores. I thought there were
Yeah.
stores.
There's
Well, how the
not.
hell did it? I didn't. Well, that's a huge edge. That's why it's going up so much. 'Cause they don't
But
have
someone
physical stores.
says big stores. I don't know. I
No,
mean,
big online. They're
yeah,
saying.
I think,
Like Lester
yeah.
says, big stores. Some in South Florida. I've seen the Deckers.
Where?
Does Deckers have stores?
Well, someone
Well,
say South Florida.
There's an
So-
Uggs in if you go to like Soho, New York, there is an Uggs store because remember they're Uggs.
Oh, there's
too.
a Hoka store. Okay, because I just like
They have a lot of different brands too. Yeah,
Yeah.
there's Hoka. There's just a pile of brands under the Deckers brand. But the stores I've seen some pretty big stores.
Okay. You know what? You guys got down and dirty. I'm just going to look at the parameters of the pre-market trading and see 183.23. I don't have anything there. And then if you guys are looking for a target, just a small target, 194.45 has been your rebound high. And a lot of times, when stocks, a big, story stock, gets beat like this and tries to come back, a clue can be when it takes out that pre-market high. Let's shift to the oil sector, and it looks like we have stock to the two big guns going in opposite directions. We'll start with the bad first here. Chevron misses by a nickel. Sales look okay. Sales beat, mixed report. Raised the quarterly dividend too here. Boy, you had good support at 155. You took that out. We'll call that resistance for now. What do you guys see in Chevron?
Never moves a lot on earnings. None of these oil stocks usually move significantly off earnings. They move off oil prices there. So when you get a big outsized move, it's almost always a fade. This is not a big move though. It's down $2. Earnings report. I mean, Oxy got downgraded to sell today. It's down 50 cents. The oil stocks never really move much on their own individual news. Unless it's like a takeover or something, they're always muted response.
All right.
That's what I got for you.
Too difficult. I mean, yeah, you're right. They just don't move enough. I don't know why these things don't move enough because, sometimes this has been going on now. It feels like for a couple of years where these names on earnings and Exxon also reported too, but they're just like kind of just stuck in the mud in terms of this. So I guess Chevron's down a little bit, but there's just too difficult. You just can't find enough like shares to make it worth your while. I think to be buying the dips in these things because you'll just be watching the paint dry in these things.
There's just no sexy story here in oil
Nope.
stocks either. I know drill, baby, drill. And we definitely saw a little bit of a Trump bump here. Obviously, it's the lows there that we hit December. But really, I mean, oil, it's just not exciting. It's not what the retail, it's not what the social media trader is looking at. Ooh, Chevron, look at these earnings. Let's go. Chevron to the moon. It's just you can't find that anywhere.
No memes.
Nobody
memes.
says it. No memes. It's the opposite of a meme stock.
I didn't put a date on this, but they had this was going back. I must have talked about a Q4 report. This was late in 2023, and they announced that huge buyback after a mixed Q4 report, and they popped it. That's maybe when it made it close to its all-time high. But I agree with you on that one. I mean, there's no AI, but they don't always move together. So your spread traders are. They're having a hard time today. I don't know how many standard deviations this move is out of whack here. Exxon Mobil beat 167 versus 156. Mixed report. Missed on the sales. ExxonMobil. We'll just go with potential resist. Look at this. That the 50-day moving average of 111.66 and your pre-market high 111.36. Any comments on ExxonMobil?
Same thing. It's not going to move a lot on earnings. It's not exciting. It's probably a stock you probably write options on. I don't know what the expected move was. It was probably like 2 or 3% tops. Just no excitement. There's nothing there. ExxonMobil. I mean, yeah, they make a hell of a lot of money, but this market is not interested in companies that make a hell of a lot of money. They're interested in a cool story. What's the story with Chevron and Exxon? There isn't one. Pass.
Okay.
For Christian, I said one pass.
Pass.
Yeah. Okay. How about a
Joel's
laggard?
reaching here. You're hesitant. I could take over. There's lots of other stocks here that are moving here this morning. If you want it, or you got something in mind.
AbbVie.
Going through the
AbbVie.
earnings, this is a
Yep.
big move for AbbVie. I was looking
Yep.
at this one this morning, and I'm like, wow, that's a big move. That's probably outside the expected move because AbbVie doesn't usually move that much on earnings. Although maybe not because he gapped down the last earnings report. So you get up here, 184, 185. What is the earnings report? Give us that, and then we're going to analyze further. We always like the fundamental information, and then we look at the technicals.
Okay. Let's see here. Beat expectations 216 versus 211. Sales beat 15.1, 14.82. So there, Q4 beat, and it looks like the guidance you could drive a truck through. 1212 versus 1232.
Not really. You might
Yeah.
drive a bicycle through it.
Okay.
It's actually pretty tight. Okay. So AbbVie, fantastic company, makes a lot of money. The story again lacks here. There isn't a cool weight loss story. There isn't a really cool story at all. You got resistance up here, 184 to 185. If the market rolls over, this is the kind of stock they bought. This stock a lot of times inversely correlated with the overall market. Keep that in mind as well. So on a rip here, up 5%, I'd be taking the money and running.
Gap it into a gap area. The high of the gap has been 184.24. You hit 185. You get through 185. I'm not saying it's going to 200. I'm just telling you I can't find any resistance until 199.48. Part of the leaders to laggards trade too here. Forget about this retracement. I mean, I got that just shows how long we've been since we pulled up that chart that I have a retracement there from 140 to 160. But if we're talking about something that potentially may derail this rally, and I'll put a capital P on that, it's the PCE. Christian with a preview.
Preview for PCE. So we're going to get this information here in 3 minutes. Couple numbers that I would keep in mind. I would watch this month over month number. So it's a little bit of a higher bar, which is good because you can slide under this because they're expecting month over month 0.3%. So 0.3. I did see Germany came out with their CPI number, which was a little bit lighter than expected. So, that's some good news over there. The year over year number that they're expecting is plus 2.6. The core PCE price index month over month, they're looking for 0.2. So I know some people like the core versus the headline number. And what else do we get at 8:30? We get also at 8:30 personal income and spending, but I think all eyes will be on this PCE number. So we'll get that in just about a minute.
And you do have Fed's Bowman speaking at 8:30 as well. So if you're a Fed watcher, but did we have a Fed meeting this week? Was there a Fed decision this week? I can't even remember.
Yeah, it was pretty quiet. Not a lot of response here. I mean, TLT is something you want to watch off the PCE number as well. Keep it on your screen. Right now, we are almost completely flat. So market is not. It's just pausing here 1 minute before the PC, but the TLT could move a little bit hot. I don't want to see that. So remember, your small caps, very interest rate sensitive. Your XBI, very interest rate sensitive. A lot of your banks, those can move off this too. Sometimes some of your tech stocks can even move opposite. So keep in mind, we got that number coming in 40 seconds here. So we'll get ready for that.
Wide? You going wide?
Yeah, I did. Yeah, I think I have to, Joel. I mean, there's just too much risk here to sit out there because this can move. Sometimes, it's a nothing burger, but a lot of times we can really move off the PCE numbers. So, yeah, I'm wide.
Yeah, I'm 61.33 1/4. That was your high from or your close from last Friday. It's a minor number. It's like a 1.5 star. The high from last week, if this is really soft, is 62 1/4. On the downside, boy, I don't know. Maybe the close or the pre-market low down to 6100. But let's see if we have any algo jumpers here. The number is out. Oh man, come on, move
Not
a
even
little
moving.
bit.
Not a movement yet. Not a tick
In
up.
line
In
with
line.
in
In
line with
line.
expectations. 0.3 versus expected, and that's the same thing for the core is also in line.
Line.
0.2 versus 0.2.
The
Wah, wah.
nothing burger of all nothing burgers. We had a 1 point movement on the S&P here, so we said we could move. We didn't move. There's nothing happening here. TLT ticking down just slightly here because the number obviously wasn't cool either. So bond traders are just, sitting here saying, and the algos are saying, what do we do with this, guys? Hey, algo, what are you doing? The other algo says, what are you doing? Oh, we buying them or we selling them? Let's rip them one way or another to shake everybody around. That's what the algos are saying right now. They're trying to
What
figure out what they want to do.
what are the names of those algos again, Dennis?
I don't know, Screw Retail 1 and Screw Retail 2. That's what the algos names are, I think.
I just think from a market structure perspective, I mean, you had like a dip and a major rip, and if you were just buying the dip all week since Monday morning, buying, and now you're back up at Friday's close. I mean, you never know when to take some profits. But you know what? We're gonna go to our guest a little bit early here. He
Sure.
is joined us, and so let's with no further ado, let's bring in one of our favorite guests. Craig Johnson, CFA, CMT, MD. I didn't know you were a doctor. Chief and Market Technician at Piper Sandler. Mr. Johnson, how you doing today? We got.
Oh, he's on mute. He's on mute.
You're on mute.
He'll figure it out.
This guy's he's a market CFA, CMT. Hey, Craig.
Still on mute. Look.
Yeah.
Okay, make sure you have a little microphone. His microphone is unmuted on, so it's on your computer because StreamYard is good. Your StreamYard mic is on. Check your computer mic. You might have your mic muted on your computer. We haven't had this in a little while.
No.
Technical difficulties.
Let's put Craig to the background for a second here. We'll keep talking stocks. Craig's going to figure this out in the background here. Actually, you want to go work with him, Joel? Or see if you got to figure it out?
Oh, I thought. Okay, you know what? I'm going to go too.
Yeah, Joel's going to go work with him. Me and Christian will handle stocks for 2 minutes. We got Craig. We'll have him for a while. Let's keep him longer. He'll get this figured out because everybody likes to hear what Craig Johnson has to say. Still no movement off the PCE here, Christian. Even the TLT, it's ticked down slightly, trying to find a little bit of movement here off it, but the market really doesn't seem to care. How? Okay, yeah, you want to go straight. Let's go straight into the other movers of the day. The Momo. Holy mackerel, Atlassian. At last, we have a stock breaking out. Atlassian to the rescue.
Well, I'm sorry. Well, what's funny with this stuff is that I kind of liked team going into the earnings report, but was I going to put a position on? No way, because I saw what happened with ServiceNow, and sometimes these things they scare you a little bit. Because I was like, geez, ServiceNow really went down a lot, and it's like an air pocket type of move. So I'm like, when I saw the report, I'm like, of course this thing goes up. And there's a question in there too about Alibaba too. I wanted to cover. I don't think we've been giving enough attention to the move that's been happening in China.
No, and my friend Mike said he bought some K-Web because you were talking about it the other day. So he wanted you to cover K-Web and wanted you to cover some of the China names here. So obviously Alibaba, one of the biggest components of the K-Web here. I didn't sell any yet either. What are your thoughts? I'm still in it. I'm still in the whole position. It's just, it was a big move yesterday again.
So it reminds
Craig,
me
do
of
we have you?
I think you got me now.
Nice.
Okay. We got him now. Okay, we're going to
Sorry about
continue
that.
this China
Studying
conversation
fishy.
once Craig goes. Unless Craig wants to talk. You want to talk China for a second? We were just starting to talk China, the China stocks, and how they've really come around here in the last week and a half, especially Alibaba coming from $80 10 days ago to 102. You want to talk some China?
Well, I just sort of look at China from like a K-Web perspective, right?
Sure.
And sort of think about it, from that particular chart. And what I find interesting here, and let me just do something quick. Let's see here.
You want to run your charts, Craig?
Yep, just give me 1 sec. I'm going to share my screen.
Craig Johnson, Piper Sandler. He's been coming on the show for about 100 years now, and
he's not that old, Joel. He's not as old as you.
I'm not that old.
Craig's young. He's younger than me, I think. So definitely not 100 years. But since the beginning, probably 10 years. Probably getting close to 10 years here, Craig.
Yeah, I think so. Now you can see the screen, right?
Yeah.
You got it.
Okay, so here's what I really like from a trading perspective, right? And I'll share this with a couple other stocks too. But I like these indexes that you've sold off, you've gone nowhere but sort of sideways for an extended period of time. And then you start kind of making these sort of big moves up. And then you sort of make this sort of bull flag in here. I would think your next move would be higher from here. Trade this back up to 40, maybe 45 on something like a K-Web. Okay. Now, if you take this as an example and you look at like a Twilio recently, and you saw something very similar in terms of this trading setup, like this thing went down, went nowhere for an extended period of time. Then you started clearing some of these overhead resistance, and you just took off, and you really haven't looked back. Other stocks that fit into this category too, like Peloton, right? Like this is another one where you've been sort of down, you kind of been chopping around sideways, make it a little bit of a shorter term bull flag. Super interesting in here. Zoom. I was joking the other day that Zoom has kind of become like the word Kleenex, right? Like Kleenex has become a generic term, and so is Zoom. Oh, I'm going to have a Zoom call today. And you look at this chart down and out, and now you're starting to take that sort of next leg up. These are the kind of things that I think are interesting from a trading perspective that should probably be a pretty good risk reward for all the listeners out there for some of these names.
Zoom's an interesting one because it's one of those that has become a complete cash cow, really. I mean, valuation, is very reasonable, even you would say. And the stock's starting to look at value stocks. Here's something we're going to take this. The value stocks actually perked up in 2025, where we obviously saw value, not even the market wasn't even remotely interested in them in December. All those gains really got hit hard. We've kind of reversed to a certain extent here, where the Momo names kind of taking a breather, a lot of them, but the value names have perked up substantially. Zoom would be a value name here. What are your thoughts to value versus growth here, Craig?
I think you just sort of hit on the theme of this month's Informed Investor, which we just published earlier in the week. We titled it Riding the Rally. I mean, the rally off of the 22 lows is still very much intact, but the makeup of it is changing. Okay, the Mag 7 is becoming the Lag 7. And
nice.
As I go through and I just look at some of these names, and I'll show you those charts in just a minute, but take a look here at, the Russell 1000 growth versus value. For all the listeners out there, if you're not looking at ratio charts, meaning dividing one against another to figure out what is outperforming, I think you got to look at some of those kind of charts. You really should be, because it really helps you sort of set your orientation as to how you should be trading this market, what you should be trading in this market. Should we be starting to emphasize value? Should we start to be emphasizing growth? Those kind of things. And when I look at this chart, just since the beginning of this year, you've started to see value begin to outperform. And you can see how that ratio chart is rolled over since the beginning of the year. More often than not, you're seeing value outperforming growth on a day-by-day basis. And then also small versus large. The other thing I've been saying to people, I actually made pens for it this year, guys. I said R2K to lead the way. Like, I really do believe everything that I'm seeing, you are going to have the Russell 2000 outperform the S&P 500 in 2025. And let me tell you, I talk to the institutions on a regular basis. They look at me like, okay, I think you've officially lost your mind. It's going to be the case because the Mag 7 have been such a large part of it. But again, just come back and look at this chart. You're starting to see a bit of lower lows, lower highs in here.
Yeah.
And you come back and you start looking at like a Microsoft, right? Fantastic company. Chart has been sort of going sideways, and your relative performance, Dennis, has just been lower lows in here. Like,
Yeah.
you're not keeping up with the market. You don't have the fastest horse.
Yeah, the Magnificent Seven has definitely been lagging here, and even some of the other names, like it's names that were really hated in December that have really kind of led the way in January. I mean, even going into other value names, like you can look at the IWM. I mean, IWM was straight down in December, went from 240 down, closed the year right near the lows of 220. We're back up here at 230, so we're
Right.
starting to perk up here on those names. I've got Nucor in my long-term portfolio, which is a stock that was absolutely just murdered. Really for no reason December, just because they were hating value names. They didn't want to touch them at all. Well, that stock started to perk up here a little bit in December too. This leaders to laggards, laggards to leaders theme has kind of been playing out for 2025. Call it seasonality. Does it stick? Like, does it last? Or is this just another one of those fool me once, value rallies, shame on you, fool me twice, shame on me? Does the value rally stick?
I think the value rally is going to stick. And I'm a fan of also looking at multiple forms of technical analysis. Typically, people look at candlestick charts. They can look at bar charts. They can look at some of those kind of things. One of the other things that I also like to look at is I like to look at point and figure charts to try to say, where can some of these indexes go? I mean, what if I told you that a point and figure objective right now on, say, the IWM was 293? And you typically reach those sort of objectives in about 6 to 9 months later. Okay. So if we're looking at, potentially 60 points here on a $230, ETF,
Huge
I think
name.
people are going to be quite happy.
I take that.
I don't think you're going to get that sort of return on the S&P 500. In fact, my bottoms up point and figure work tells me 6,600 is sort of where you're going to be on the S&P. And I think you're going to get a much larger move down cap and in the Russell in these names. And again, it's a composition issue to a degree, Dennis. And you asked me, do I think these value trade is going to stick? Well, the biggest part of the Russell 2000 is going to be financials. It's going to be healthcare, and it's going to be industrials. And I can tell you right now that financials are really starting to pick up in terms of performance. And when you come in and you look at the KRE and you look at some of these other pieces, like, when you had the AI slide, it could be a new dance step for you, but when you had the AI slide earlier in the week, you actually saw more advancing versus declining issues in the KRE. You also saw in the Russell 1000, 2000, and 3000 indices, you saw, again, a large number of advancing issues compared to declining issues. The market's just rotating. The market's taking money out of some of that AI trade. I mean, again, one of the things that scares me about this market is when I come back, and again, great company, but when I look at a chart that looks like this, Dennis, what is this if you were to sort of classify this? It is what you would define as an island top. You gapped up, you chopped sideways, you broke down again. Like, this is not a setup you say, oh, I got to buy this today.
Is that an Ichimoku cloud?
No.
Okay. I
Say
just
that
like
3 times.
I just
really
like to
fast,
say that
Joel.
term. I just like to say that term. I've heard
It makes you sound brilliant.
It does. It really makes you smile. I had a whole new respect for
Craig.
Joel after he said that.
Hey, Craig, just a question for you too. Regarding like the rotation that we saw, and I like what you mentioned about the ratio charts. Putting one over another really kind of allows you to kind of take a look to see what the relationship is and what's outperforming versus what not. And one of the charts that I was focused on this week was IGV, software over semis, which just had this huge move this week, and it just kind of showed the rotation that is going on, even within a sector, because tech obviously is the largest sector out there. My question for you about the rotation, and again, you're bringing up so many great points about right now there's more advancers than there are decliners. There's a lot of focus on the small caps. What about, do you also think that the equally weighted S&P, which kind of got hit towards the end of last year, but that's actually been outperforming? So rather than small caps, which I know are going to be driven by what the dollar and rates are doing, do you think also that the RSP, which was strong all day yesterday and led, do you think that's going to continue to outperform this year? And then secondly, what about the ones that nobody ever talks about, which is the mid caps?
You've nailed it on all fronts there. So in terms of the equally weighted, I definitely think that the equally weighted is going to continue to perform and perform well. I know that a lot of the large cap managers can't reach all the way down into small cap land. If they did, with the billions of dollars that they run, there's just not enough ability for them to buy those small cap stocks in big enough size. So your MID will definitely be probably one of the best beneficiaries out of it right away. So while you've got shorter term trading ideas out there, if you want to park some money, I would definitely park some money in some of these mid cap type indexes and leave some of it in there. But small cap, I think, is going to do well. I mean, there's a discussion of tariffs, international, domestic focus coming out of Washington, those kind of things. Probably going to be a headwind for a lot of these large multinational companies, and therefore a down cap is probably going to give you some better opportunities and probably better visibility for the earnings and the fundamentals and those things.
Craig, let's do something that we haven't done before. Well, someone asked about your platform there, your charting platform. Is that your own unique thing, or can't you tell us? You'd have to kill us. What do you have there?
Well, okay, so the chart you're looking at right here just happens to be market surge. Okay, so
Okay.
it's just from Investors Business Daily. It's a nice, quick platform for pulling up charts. That's why I like to use Market Surge. I also like to use StockCharts.com. Those are two things that I'll even use on an institutional basis. And then I also, on a regular basis, I do use things like Bloomberg, right? So I get my charts from multiple different places when I go through and I look at things. So if I want to come through and look at bonds, I want to look at those kind of things, I can come in here and I can pull up all these different things. And so when I want to go mark up charts and assemble them and put them together for the institutions and everything else, I'll probably pull most of those from Bloomberg. But if I'm just looking at things quickly, for instance, here's a discussion on 10-year bond yields. And this is going to be sort of the linchpin for a lot of people as to where this market is going to go. I'll be watching this carefully. Dennis, what kind of setup is this on the charts over the last 25 days for 10-year bond yields?
I can get that one. It looks like its chart's got dandruff. Head and shoulders, I think.
It's not an Ikimuchu cloud, that's for sure.
I don't know anything about any Ikimuchus, but that one looks like a head and shoulders. I got that one.
Correct. And so if you got this sort of setup on the chart right here, and you measure from the head to the neckline, and then sort of extend it down, what direction do you think equities are going to go if 10-year bond yields perhaps go down to maybe 425 or the 200-day moving average is at, or 417, right? That's got to be an underlying catalyst for equities, right?
I would think so. I would think actually the IWM especially.
I would think the IWM especially would be definitely going there. So you then can come back and look at other vehicles. Some people like to buy the 2X bull or the 3X bull for some of those kind of things. But from my perspective, I'll let people decide how they want to trade those kind of things. But the rates and the macro picture, boy, I think you've got to set up for yields to come in, small mid caps to work, and very few people seem to be positioned for a move like that, which tells me that it's probably going to be the right move because everybody's still so focused on the Mag 7 stocks.
Could you show us a point and figure? I don't even know. I mean, I don't even know if I've ever showed a point and figure chart here, and you came up with that target of 290, which a lot of people would be like, woohoo, 290 at IWM, man. We'd be that could put me out to pasture if the market goes that high. Could you give us an example?
Oh my goodness, you're not that old, are you?
I got you all by a few years. I know I don't look it, but I am.
You look good.
Kind of threw him under the bus. Did you have a point and figure chart? I don't know if he has one ready here. But...
So look, where I go to my point and figure charts is one of the
here we go. I like this.
One of the de facto standards I use for point and figure charts is, I go up to the NASDAQ and, Dorsey Wright, Tom Dorsey's a good friend of mine. And I really like these point and figure charts that they create there. It's another service for people, but you can see here when you look at the chart, it'll give you a bullish price objective, for like IWM. So it's a great way to try to say, what is my upside? What is my downside? And then you could decide you could trade smaller waves inside of it because these are all daily charts, right? Or point and figure charts to be correct. Kind of a three box. But I won't go into all the nuances of that. But it's a way for you to get those sort of measured objectives.
Hey, Craig. So we talked about broad market and we talked about rates and small caps and so on and so forth. I love it when you also bring on your stocks that you're watching too. Anything now that you've mentioned, which I'm going to keep this term by the way, the lag 7. Anything because I think that's brilliant and I agree with you too. I don't think that that's where the attention is going. Well, the attention might be there, but the performance isn't going to be there. What are you looking at in terms of some of the names that are going to be outside of those big caps that might be that are setting up well on the charts?
Yeah. So let's do it this way, right? So we run a portfolio, and here are the changes I made to the portfolio just earlier in the week. Okay.
Can I ask how often do you make changes, or is it just ad hoc?
Typically, I make changes about once a month.
Okay.
I don't need to make changes more than that. But these are names that we've just added into the model portfolio and ones that we deleted. My timing, sadly, was not great on American Airlines, but you're showing the best relative strength in the airlines among the transportation names and those kind of things. And so I think that still looks very good. We've owned Netflix for a while, and when things get to become more than 4% position in the portfolio, I cut it back to 2%. And it's been sort of a methodology we've used for years, and it's worked pretty well. So Spotify, Roblox. I mean, look at the chart of Roblox, by the way. It's just
we talked about that yesterday. Yeah.
Correct.
Yep.
It's just like the other ones that we were talking about, right? I mean, sort of down and out, and then you just start lifting out of these things. Like great ways to sort of, pick up some pretty decent returns. But I don't have to buy every chart that looks like that. I can come back and buy a Spotify that's already been working. I mean, I'm not afraid to buy things at highs, because if the trend is still intact, well, it may continue to keep making more highs. So that's some of the changes that we've made in some of the things. And in terms of performance wise, when we put this together, model's up 7.81% for the year, compared to the Russell at 348, compared to the S&P at 381. I think we're doing the right stuff.
Craig got a
breaking
question.
news here. Just 1 second. Breaking news. NVIDIA ripping higher here. Reuters reporting that Jensen Huang will meet President Trump at the White House. So, I mean, this is where we're at. These Trump bumps and Trump dumps. Craig, one thing to say here, and I just want to get your thoughts on, obviously, the new administration here. But, I mean, this president's going to be very vocal. He's going to definitely speak whatever he's thinking here. Talk tariffs, in the case of, all these companies. I mean, what do you think of tariffs here, first of all, in context to the overall market?
Well, tariffs, I think, are sort of President Trump's bully pulpit, right? There's things that he wants to get done. There's things that should get done. And the reason that he was elected, he's going to go after that mandate that he now has. And he's going to use tariffs as a way to gain leverage and gain negotiation points. And that's, I think, exactly what he has done. I think what did it take, about 60 minutes before Colombia changed their tune? I suspect that Mexico, Canada probably won't be that different in terms of changing their tunes for some of these things. I mean, it's horrendous, the fentanyl issues and all these other problems that are coming, and they just seem to turn their head to it blindly. And
I mean, it's hard to group Canada in with that. I know he did, but less than 1% of the fentanyl comes from Canada. So, I mean, it's kind of just group it all together.
I think voters say they want zero fentanyl coming from Canada. I think they want zero fentanyl coming across the southern border too. So again, you're at that point in time where safety, security are really what people want in this country. And you look at what's happened in New York, you look what's happened in Minneapolis, you look what's happened in all these cities. It's just people don't feel safe. And I think Trump has got a mandate to fix some of those things. So ice cream truck is being removed from the White House front yard, and you're bringing in ICE to come in and address.
Greg, before we let you go, we got a couple things from the chat here. We had some energy earnings today. No AI in energy. Oil's been having a nice move. What do you get? Just 2 things here: the energy sector and quantum stocks.
Yeah, so great stuff. So if I'm going to play energy, one of the ways that we've been doing it, because again, I'm trying to beat a benchmark. I'm trying to make absolute returns, but I'm sort of more focused on things like Enbridge. I'm more focused on Williams. I'm looking at the volume going through the system. So if we're going to be at sort of an economic recovery, I would rather play the pipeline. So I'd rather play the natural gas because I think those are going to be interesting ways to do that. In terms of ways to play quantum computing, I think is what you asked, Joel.
Yes,
I
sir.
think it's really only two ways to do that right now. I think that's either IBM or you got to come back and play Alphabet. And not only is AI going to help IBM, but it's also going to help on the quantum computing side and everything else. And when you look at IBM in here at a market cap that's 238 billion, it feels like a mid cap stock versus anything else. And the longer term trend has been quite constructive here for IBM. I know it seems sleepy. I know it seems like a company that's seen better days gone by, but I got to tell you, they're on some cutting edge stuff, and the chart looks good, and that's what I like.
Hey, Craig, last question for you. Bitcoin or gold or both still in terms of these trades?
I think you got to have some diversification into Bitcoin, I think is what you have to have. As all of you know, I've often heated my house using crypto miners and still have the equipment hooked up and stuff. But I think there are some altcoins and stuff like that that look really attractive. We know that there's going to be probably not in the first round of administration changes coming out of Washington, but maybe in the second or third round, there's going to be more of a deregulation taken toward the cryptocurrency markets, which I think are going to be fantastic. If I'm going to play this from kind of a broad perspective, if I'm going to play it from kind of a broad perspective, we've owned Hood, Robinhood in the portfolio. I would also tell you that this is probably your most mainstream, predictable way to get on and off your dollars from the crypto world and do it in a very simple manner, right? The way that people were interacting with cryptocurrency in 2017 was very kludgy. And I think what Coinbase and Robinhood have done has made the on-ramp easier. You don't have to have hard drives, saving coins to it, doing those kind of things. You can kind of use these guys as your custodial to make those kind of changes. And then again, I love day in, day out, just trading some of these altcoins. I mean, I got a whole list of them that when they hit certain technical levels for them, I just buy them. And when they get to certain objectives, I just sell them. You can do that all day long, and it's beyond fun.
We've been on the line with Craig Johnson. You all know him, CFA, CMT, Chief Market Technician over there at Piper Sandler, giving us a great perspective on the markets. Craig, as usual, really enjoy having you on. We're going to be dialing you up next month.
Thanks, guys.
Thanks, Craig.
All right. I want to see if you guys are buying a dip in a stock that was a major laggard in last year, 2024, showed some life at the beginning of the year, but it's getting its butt kicked today. It's a boring stock.
Boring stock, getting its butt kicked.
Leaders to laggards, Dennis. Leaders to laggards.
Oh,
One of the greatest.
I know what it is.
I'm looking through all the names. There's a few stocks getting its butt kicked. I
Walgreens.
don't know where he's going on this one.
That's not we
they cut the dividend. Yeah. Dividend to zero. That'll do it. It was working really well. You can't stay in these things that long, though. WBA was up at one point in time almost 50% in January. So it worked really well. It's all gone. You hold on to these dogs long enough, they get you. So just be careful on that.
You cannot overstay your welcome in some of these names that are in downtrends. You get that move, you get that you get the look, from a nice bounce, because anything can bounce in a downtrend. You get that bounce, you put the money in your pocket, and you don't overstay your welcome, right?
That's it. Don't overstay your welcome. You take the money and run. We're once again in the Steve Miller Band market. Take the money and run, especially when your dog of all dogs, Walgreens, pops 50%. Take the money and run.
Okay, what about filling the gap, the earnings gap here, the big earnings gap? I'm just going technical here. All the people that got stuff short, their bids are at 955.55555. You fill the gap, you put a couple lows in this area, and then you turn back up. This is going to give them some more cash flow. They're going to close some more stores, maybe hire some good people. I'm just giving you the other side of the coin. So if you got jammed short in
There's
this
no other side of the coin for WBA. I think WBA goes the way of Rite Aid eventually. You know, I've eternally hated this stock, but you got to respect seasonality. Seasonality played it's a huge role here for WBA in January. I think the party's over here. Maybe it can pop back, but I mean, we're just suspending dividends, had the nice 9.85% yield. Now that it's gone to zero. I mean, if you were in it for the dividend, you're selling it.
Yeah, all the dividend funds are you have to bail out of. Okay, Chance threw us a nice tip here, and
What do we got?
he's
What do we got?
Mara, and I'll let Christian talk. I'll let Christian talk to this one first.
Bitcoin miner.
Yeah,
I think it's doing okay, but to Craig's point, I think that there's better names in the space. It just isn't doing enough for me. Again, I get bored when if something if there's a catalyst out there, such as what the catalyst in the space is, which is the crypto's going up.
Yeah,
so
exactly.
Bitcoin going up, and also just to kind of pull some more information from what Craig told us, look at the difference between the relative strength of either one of those, the coin or the hood versus Mara. So that should be telling you something. And I'm long. I loved it when Craig mentioned, because I think Craig is really good with this stuff, but especially when he agrees with me. But no, just kidding. But I'm long hood, and hood just keeps making new highs. So there's what I refer to a lot of the times as opportunity cost. Right, Mara's been doing nothing, and meanwhile, hood just keeps going up and up and up and up. So I stick with the ones that are showing the relative strength. I think that depending on your time frame, I guess you could wait it out with Mara, but I would rather be in stuff that's going up.
Wow, the hood $53 here now. What a steal that was when it got under $10. I mean, there was just so many clients, so many everything. We talked about this eventually being a takeover candidate if it kept going lower. That obviously is gone now because the stock just turned around now, blown away, in market cap. So there's probably nobody's thinking about buying it now. But I mean, wow, what a turnaround. Obviously a lot to do with Bitcoin. So to Christian's point, hood is a great way to play Bitcoin, where you've seen Bitcoin, now making new all-time highs. Probably one of the better ways to play it, hood.
Okay, wrapping things up here on this Monday. We're very muted up here near the pre-market high of 61.30. I gave you 61.33 and a quarter because that marks a round trip in the S&Ps for at least from the close from Friday. So see what kind of action we get off the open. Monday's guest from Freedom Capital Markets, Jay Woods. And you know what Jay's going to do when he comes on the show? Huge Eagles fan. Fly Eagles Fly. So we're going to have Jay Woods on Monday talking about his Eagles. We're going to have the return of Ryan Dietrich on Tuesday to set up the Super Bowl indicators. So boom, boom, boom. That's our setup, folks. Great show, Christian, Dennis, pre-market prep. That's it. That's a wrap on this.
Have a good weekend, everyone.
Have a great weekend.